So what moved rates this week really? Well, inflation used to be the headline grabber, but not anymore. Now it's all about trade policy and global confidence in U.S. debt. CPI even came in Tuesday right where economists expected. In fact, a little bit cooler. Normally, a result like that would ease rate pressures. But this week, markets barely flinched. And why? Is because they're trading on bigger worries. After recent tariff escalations and then a 90-day pause announced by the U.S. and China, traders are reacting less to monthly reports and more on fiscal chess moves. Investors are asking, will foreign countries still buy treasuries if we're lobbying trade threats? Will tariffs choke growth or spark inflation? These are the structural questions that dominate the bond markets right now. Even a slate of Fed speeches from Waller to Jefferson to Powell couldn't settle the markets. And by Thursday, softer than expected PPI and weak retail control group numbers gave us a brief reprieve, but even that couldn't reverse Wednesday's damage. So what's the moral of the story and what should we be looking out for? Well, we'll get to that a little bit later on here in this video. But the question is right now whether to lock or float if you are looking to make a home purchase right now. Well, let's not go ahead and overcomplicate this. If you're under contract and the rate you've been offered works for your monthly budget, you should probably lock it. Yes, we saw a dip on Thursday, but we're still playing in the high sixes and volatility is relentless. For home shoppers not yet under contract, you may want to float, but with caution. We've seen multiple whiplash-style reversals in the last few weeks. And if another surprise headline drops, especially around tariffs, Treasury auctions, or international buyers pulling back from U.S. debt, rates could jump before you even have the time to react. So what's coming up next week? What can we expect? Well, the economic calendar looks lighter, but don't relax just yet. We'll be watching jobless claims, housing starts, and Fed commentary, but none of these are expected to make a huge splash on their own.